What's up, guys? I welcome you in this wonderful video. So there is something interesting that I want to share with you when it comes to price action analysis. I think it's gonna be more of reversals and entries. So I'm gonna make this video short, but I'm gonna try to cover both of those concepts. Here we are, we can see that okay, the market was moving up and then it entered in some kind of a range or in transition and it started going down, and then again it is now entering in some kind of a range or in transition. In this scenario or in this kind of a structure, there are different things that traders can do, or there are different approaches that traders can take. Another trader can prefer to start trading this as a range, meaning he will be selling when the price is above and he will be buying when the price is below. It is a good thing. However, trading a range in that way, you need to know that it's not safe. I always say that it's not safe to always try to buy here, selling there, buying here and selling there. It's not safe. But however, as a trader, it is very, very important to pick one side in a range, and that side should be the side that is displaying some kind of strength. And how do we see strength? Obviously, we look at the waves, we look at which waves are bigger. If the sellers' waves are bigger and aggressive, it means that the sellers are strong. But if there isn't any kind of strength being revealed or any sign of strength being revealed, then the side that you should take, it is the side which is opposite to the initial wave. For an example, in this case, the market entered the range in some kind of a downtrend or from a downtrend. Now, so for you as a trader, what you should be doing here, if you don't do what I mentioned earlier, you should be focusing only on buying. Why? Because it is highly possible that the market goes up because it was going down initially. What does that mean? It means that for the fact that the market entered in a range, it meant that, or it means that the sellers, they are now weak. So if the sellers are weak, what does it mean about the buyers? It means that okay, the buyers, they are gaining strength because they are now fighting, and it is likely that a reversal is coming, because reversals always come from a range. Reversals always come from a range. So you as a trader, buying and selling at the same time is going to put you in a high level of risk. Why? Because a breakout will come and it will find you doing the selling and the buying at the same time. And as you do that, when the breakout comes, you are likely to suffer the consequences. Why? Because you didn't follow the strength, or you didn't pick the side that is likely to give you a breakout. Now, I don't say that it is fixed that a breakout from a downtrend is gonna go upward, but that's the probability. It is highly possible that here, when we see a breakout, we're gonna see it going on the upper side. And then if you're gonna see it going on the upper side, what should you be looking at for, or what should you be looking at as a trader? Let me clear to just show you something. If you can pay details into these lows, you can see that these lows here, they are a bit higher, and then these ones, they're a bit lower, meaning okay, the sellers, they were a little bit pushing aggressively, but their strength or their power, which they displayed through this low and through this high, which is obviously lower than the previous one. And for the fact that we have these two highs and these two lows, it meant that in this portion of the price, the sellers displayed some kind of strength. However, they couldn't continue to convince us. Why? Because they failed to give us a new low which is lower than that previous one, and the buyers, they are now giving us a high which is obviously higher than the previous one. So this high and this low cancelled this amount of strength displayed by the sellers. So what should you be looking for as a trader now? Should be looking for something which is close to some kind of a head and shoulder. It is not actually a head and shoulder, but something close. Something. Let me just illustrate. So this is how a head and shoulder will usually look like. There will be a shoulder and then a head and another shoulder, which is a high. So same thing applies here. We are now waiting for lows which are a bit higher than these two previous lows. So we're expecting a low that is higher, and then from there we know that okay, what we are only waiting for, it is a retest or a breakout, but it will depend on how the breakout occurs. To just confirm my example, just observe what was happening here in this transition that I showed you earlier. You can see that we received these are high, and then this was the next high, and as you can see, the other high became lower, even the low became lower as well, or almost at the same point with the previous one. So for the fact that we received this high and then another high and then a lower high, so it was now the right time for you as a trader not to just execute your sell up there, because although you can desire to generate huge profits, but it is very, very important to make sure that you enter at the right time. And the right time is where you now have a clear confirmation. And where do you have that clear confirmation? Here, when this retest came. So as long as price is above this yellow line here, or this support, it is still on the hands of the buyers. But as soon as it breaks down, and obviously this retested was a very, very good confirmation, then you can enter here as a sell, not just because you entered you used a retest and the breakout to make your decision, but because you even observed how the highs became lower from that main high or from that highest point. So for the fact that we have the highs getting lower, so that should be something which convince you to wait for a confirmation. And then in this case, the confirmation was this breakout and a retest here. So that's the same thing that you should be observing in this kind of a move here. Wait for a low to come, and the low should be higher than this previous one, and then your role is to wait for a breakout and then maybe a retest. However, we can see that this wave is promising that it is going up, and it can go up and come back and then retest without giving us a low which is far down here, but still this will act as a low, and not just only the low but as a confirmation as well, because it will be retesting this resistance level, and it will be telling us that okay, now price is being controlled by the buyers, because as long as price is below this yellow line, it is still price owned by the sellers. But because now it is breaking out, it is showing us that okay, the buyers are coming in, but we cannot make a decision only from this breakout. We need a low to just confirm that indeed the sellers are failing. So we just need to give the sellers one opportunity to try and push down. If they push down and they fail to break that low, it means that okay, we are good to go long, or we are good to go with the buyer. So we have to wait for the sellers to try and let them fail, and then we enter as a buy. So this is not some kind of signal. It is obviously a lesson. It is just me trying to illustrate to you how I look at breakouts and how I make decisions on such moves. And I hope this is making sense, and let me just keep it short and leave it here. Thank you guys for watching.